Hey there, this is David Cox, Senior Portfolio Manager at Financially in Sync at Raymond James in Waterloo, Ontario, Canada. Today on the webinar, where do we investors stand? It is Friday, March the 21st, 2025. Let's get started. I'm going to sort off by week, as we always do. Bitcoin up on the top of the list here. Been a bounce in risk assets. But again, remember, we've got short-term and intermediate-term sort of downtrends here happening. And so again, in context of bigger picture, we always have to keep zooming out here. It's very, very important. The market has been oversold. The market is been weak and causes a lot of fear, and we certainly need to go and ensure that we are using and applying and interpreting that fear in context. A reminder to pause your video player at any time if you want to get more detail. So again, here's just that weekly S&P 500 chart. I've just drawn a horizontal line sitting up here against that previous peak of the last summer. You can't get negative here when we're sitting here RSI 5 oversold. I want to bring this up again on a weekly chart like this. RSI 5 does not get oversold more than usually about once a year. And you can see, here we are, 2025, there was one time in 2024, one time in 23, one time in 22. It doesn't happen very often. So again, what does it mean? It means that momentum has been weak in this picture, big picture, which is a weekly chart. So again, we want to be really careful as investors, right? It's very easy to let emotions get the better part of us and to become negative after negative price action, to become positive after positive price action. And if you make decisions like that, you will be caught both ways. Here's the S&P 500 on the daily chart. Again, I got 3 circles on here just showing those lower lows on the daily chart, but we're turning up here this week on the MACD basis from a low level. I've just highlighted the prior turn-ups that have happened over the course of the last couple of years. Now, this is, I think, interesting for us here. So in the bottom panel here, we've got Toronto turning up against the US market. Now, Toronto, Canadian stocks have been underperforming for about 14 years, and this has been pretty consistent with a little bit of an exception here in 2022. They tried to get going, but they did not. And so again, usually what happens is that the value versus growth relationship is correlated. Now, the value versus growth relationship at this point is still in a downtrend. That is a downtrend, meaning lower lows, lower highs. And again, as I pointed out here, it has not turned, okay? This is not, it is premature. So again, is Toronto about to turn and start to provide robust relative strength? I don't know. But let's take a look at the next chart. This is the weekly chart of Toronto. A little bit of heavy action here in the last early part of this year, which looks to me, kind of starts to resemble a lower high, which means the market is going to have to prove itself further to draw me and our clients in. That said, here's an example of an ETF, WXM in Toronto. This is an ETF that is a momentum ETF of Toronto. The bottom panel, I've got the relative performance versus Toronto. So again, remember what we're doing here. We're looking at Toronto's been outperforming the US, and now what we're doing is we're looking at an ETF that has been outperforming Toronto. And you can see from the perspective of this weekly chart, this is an uptrend. And you can see the top holdings I put on here because, again, there's no coincidence that several of these holdings we already own as clients. And the reason is because they are strong stocks in uptrends, both absolutely and relatively. Let's take a look at a couple of other clear uptrends to me. These are stocks versus bonds. On the left side, we've got Canadian stocks versus Canadian bonds. On the right side, US stocks versus bonds. Certainly look like uptrends to me. Yes, we can certainly argue they're pullbacks for sure, but they're pullbacks in uptrends. Not much more to say. I think this has gone too far. This is kind of crazy here. I'm sure you've been reading news about this. The hate against Tesla as an organization and certainly against its founder is kind of unbelievable in my opinion. I'm just shocked by some of the behavior that we're seeing make headlines and certainly make news and pictures as you're seeing arson and all kinds of things. Standing back from an investor standpoint, I mean, this is not, it's almost not new. There's a lot of kind of love and versus hate with respect to this company and this stock, and it's very interesting. So from a technical standpoint, this is a weekly chart. The stock is down 51.7% from the highs of the fall of 2024. This is a weekly chart. You can kind of see here, it's right back to the range. I mean, this is where, again, the red circle is where the robotaxi news came out, and the entire, certainly the media, everyone was like, oh my goodness, this is so bad, this is so negative. The stock went down and then immediately surged and went up more than 100% before pulling back now. So again, I think just all I'm trying to point out here is from a pure technical standpoint, you have to look at this chart, and it's tough to sort of be negative. Again, there's a difference between being negative and positive. At the same time, I think that it's fair to say that sometimes, again, the story that we want to embrace does not match the actual demand and supply in the market. And that is where I think, again, we want to use technicals to be able to understand and interpret things. Same example here, but totally different, right? So we've got a world that is, facing trade wars and tariffs and all kinds of business and crazy things. And what? Copper is going up and breaking out to all-time highs. Yep. That's what's happening. So again, copper, you know, the PhD in economics is surging higher. It certainly doesn't look like weaker economic conditions lay ahead. Swimming in the All in Sync pool. These are monthly charts. So these are really big picture charts. A couple of stocks here, Fix on the left side, Fair Isaac, FICO on the right side. These are monthly pullbacks. Well, what does that mean? You can see here, every one of these bars now is monthly. So pretty big picture. These are uptrends and these are pullbacks against the uptrends. I like the selling tails that have developed. Both of these positions have been taken and bought for value in the All in Sync pool. Just giving you an example of how we would use stocks that meet the In Sync universe. These are stocks that have outperformed the S&P 500 on a 1, 2, 3, 4, 5, and 10-year time frame, and buying them on multi-month pullbacks. Now let's turn over to some weekly charts. Just look again. Let's do the same analysis. And you can see how, from a fractal standpoint, charts and analysis can be done on, you know, in this case, what we looked at a monthly chart, now we can look at a weekly chart, and we've got daily charts. It's all the same, right? Are we going upwards? Is the trend upwards, and is the relative trend upwards? Here's 3 stocks. Dual listed RB Global trades in both Toronto and the US, outperforming the US market. Berkshire Hathaway is making new highs in the face of this correction. Agnico Eagle, we've also talked about several times in the last couple of months. This is also making highs. Relative highs and absolute highs are uptrends. We like those. Energy stocks perking up a little bit here for sure. This is Cheniere Energy, LNG in the US. You can see here I've plotted again a couple sets of relatives, right? So bigger picture, if we zoom out, we can see that this has been outperforming energy sector. That's XLE, and in the bottom panel, not as consistent as certainly I like some of the stocks to be able to do, but again, certainly outperforming the S&P 500. So what we've got is a stock that not only meets that In Sync universe, but has also been outperforming pretty consistently on both the sector and the market in general. Let's finish off with sector watch here. There's the energy stocks I just touched on. There's financial stocks have continued to be pretty strong for sure. Down on the bottom here, consumer staples. Again, that's a defensive kind of look there on the bottom. Look at that, Canadian REITs bouncing the least, utilities and whatnot. So again, lots going on, no shortage of news, no shortage of headlines, and no shortage of concerns as we sit here. Please follow me on X. I'm at David Cox RJ. Thanks again for your time this week. This has been David Cox, Portfolio Manager at Financially In Sync in Waterloo, Canada.